Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, May 15th, 2016. All right, where are we at in these here S&Ps? There's two things I want to talk about that you should be looking at from a technical basis, and we're going to look a little bit deeper into the profile, which gives us a better idea of what's happening under the hood. And then I've got a number of trade ideas for you. I see some names coming into support, and it's going to give you an idea of what I'm looking for in the near future. So first things first, S&Ps. Probably you're seeing a head and shoulders here. I talked about this in last week's video. Certainly I'm seeing it as well. It is a possibility. We have the neckline here, could break, okay, but at the same time, breaking out of here, we do have channel support, right? That's right in here. The S&Ps have been clearly trading inside of a channel. So that leads me to believe, and also the way that the market's been trading, which I'll get to in a moment, but that leads me to believe that maybe it won't be all out, bearish move to the downside. That first things that's going to occur is that if the neckline is broken out of this head and shoulders pattern, you're probably heading to here first, and you're going to be at about 2030 in the S&Ps, and then we'll reassess the situation there and see how this bottom of the channel reacts. Notice that the last time we were here at the bottom of the channel, we rallied all the way to the top. I don't know if that'll happen this time or not, if we go to here or if we go weaker and then we go a bit lower. So we'll be watching. Overall, I still maintain that it feels like to me the market still wants to lift up one last time and retest all-time highs, but doesn't have to happen. Tops are generally complex. Remember that. Bottoms are more of a V-shaped occurrence, such as here is one big V, and the market just takes off. Tops are more of a complex thing. Here, you see here very clearly, this is kind of complex, and then it breaks down. This is also kind of complex, and then it breaks down, right? So that's something to think about there. Okay. Other indices. The only thing I want to point out here, there's not that much to talk about, but just the fact that the Russell, which has been a leader here and again, is probably looking, I would say slightly more bearish than the others. Let me see here on the spider. Yeah, you see how the S&P here has this support here in the S&P, and it is not yet broken down below the low of this bar. And if I look at IWM, you can see that it clearly has, that the IWM has broken down below the low of that bar. But again, we'll see. It's the same, it's still the same type of head and shoulders pattern. Same thing. I just wanted to point that out, that the rut is showing a little bit of relative weakness, so who knows if it's going to be leading us to the downside or not. Overall, what the whole pattern has me thinking is it doesn't really feel right to me for a big breakdown. At least certainly not all at once. Like if we were to see head and shoulders break, then what I'm thinking, and all the markets look the same, but here, look at this cluster of prices here. There's a lot of value here. This is probably where the market would go. And then you'd see a bounce. There would be some support there, because it's the same thing in all the markets. The S&P has the same situation where you just have this cluster of price where I think there's a lot of value. And generally areas of a lot of value, it's more difficult for it to just drill right through it. The market will pause there. So that's what I'm seeing. All right, let's take a look at market profile. Here's where things get really interesting. For all the bearishness of price, you got to remember that it's all about value. This is the most important thing that I learned from Jim Dalton, is the fact that you need to be trading trading value. And not be just misled by price. And those of you that were taking his intensive, I give you guys so much kudos for taking that course, and I was absolutely just honored to be able to assist him in the promotion of that. The feedback that I've gotten from everybody that took it, pretty much everybody absolutely loved it. And I'm just mentioning that because it ended on May 9th, the final Jim Dalton intensive number 2 just ended. But anyway, going back to the whole value versus price discussion, value has been consistently overlapping this entire week, right? So this is not really the sign of a big bearish move as of yet. You have to have the value broken away like this, separated in order for it to be more bearish, and it's just continually been overlapping to down. All right. That being said, also Friday's more bearish close was very typical of what we've been seeing lately in the market over the course of the last week, where there were lots of liquidation breaks and also short covering rallies, and the market would either advance or decline just on those two, as opposed to stronger selling. Now, it is split also into two distributions. This is a set of single prints here. This is also one little tiny single print here. I don't put that much weight into that, but this one certainly is enough single prints to break this up into the two distributions. So you have basically, let's call this one, and we'll just ignore that single print there, and we'll call this two. So what will be the market's MO on Monday? As we know, we take these areas very seriously, where we say, look, the single print here should be resistance. This one also, and we're gonna judge the market on Monday if it trades anywhere inside of Friday's range. If it's here, it's relatively bullish. If value is established here, it's more bearish. Why is that? Because these are the areas that correspond with the two areas of value, with the two different distributions. So we'll just look at it very, very objectively that way. I had a long sort of rant on Tasty Trade earlier in the week, and it's a clip that I recorded, and I will have it put up in the weekend update. But I was talking about the fact that people are generally not paying attention to the right things when they talk about the market or look at the market, and certainly the way that they are led by the media to believe that just the fact that the Dow is down 185, which is what it was on Friday, that has any meaning, when none of these absolute numbers have any meaning whatsoever unless they are talked about in relative context. So please, when you talk about the market, think about, is it inside of the prior day's range at all? Is it outside of the prior day's range? Is it above the prior day's low? Is it in or out of value? Things like that. Where is the current day's trading range in relation to the overnight range? If the market is rallying, but and S&Ps are up 17, and certainly that's what the media is going to focus on, but the market hasn't taken out the overnight high, well, that tells me that a lot of that move probably happened on a gap and it's susceptible to filling. And if it hasn't yet taken out the overnight high, well, then it's not as strong as you would think. Things like that. So that's the reason. The reason I'm bringing all of that up is because it dovetails really nicely with this whole setup here that I want you to pay attention to on Monday as the market trades, because you're going to judge whether or not the market is bullish or bearish not by how much it's up or down, but where it's trading in relation to the prior day's high and low, and also its prior day's value areas. So the general rule is, as I was saying, whenever you have a day split into two distributions, you treat these two distributions as if they were separate days. So this is one day. We'll call that Friday 2, and maybe you can call this Friday 1 or whatever. And then you want to see how the market trades in relation to those. All right, let's talk about a few trade ideas, things that I'm looking at that I find very, very interesting. Let's talk about Apple. I haven't talked about it very much for a while now. It's really not been on my radar, except now it's starting to be on my radar. And the reason is because if you look at this weekly chart and you flip it all the way out to a monthly of 20 years, this is the first time since the lows of 2009, and I guess this must be this is the March 2009 low, which we know was the beginning of this bull market. Since then, Apple has rallied, and for the first time ever, it is now pulling back here at the 85 level to this dominant trend line. So I really believe that this causes a bounce. I think the stock will at least move to 85 and come up to at least to retest the 100 level, where it might find some sellers. I say that because if you connect this here, right, and you bounce up like this, that takes you to at least 100, to the downtrend line. So I'm going to be active as a buyer here in the 85, 86 area on Apple. I think you can do a risk reversal there. I think you could be easily short puts and long calls, short put verticals, long call verticals, whatever the case. As I was saying on the Tasty Trade show earlier this week, the implied volatility in Apple is not really expensive. You may consider just buying a whole bunch of stock and buying puts to hedge it so that it'll give you confidence to leave the stock on for a couple of weeks. And in that case, if you do something like that, then of course your risk is nothing but the 30 or 40 cents that you may have paid for the put. So we'll see. So that's something that I'm seriously thinking about, but it's going to take a few days to get down there if it does. Okay, next item up for bids is Amazon. This is probably my favorite day trading stock right now. I just feel that it acts really, really technically well. Notice that there's a breakout point here, which is part of the gap move here. This is the earnings gap here. And then you had this consolidation level, and then you gapped up and over the prior all-time high. That is going to be a buy point, I believe, in the coming weeks. So be aware of this level right in here, which is going to be a high of 696.44. So right here at this 696.44 level, that's something I'll be watching for a short-term buy. And these could be as long as just 15 minutes to all day to maybe 2 days, but it's just something I'm watching. I am keeping in mind that the stock is somewhat overextended from the 20 MA and also from the trend line, but I am also a seller of puts all over the trend line in any durations that are 2 weeks or less. And what I like to do is just wait for the stock to have kind of a flush to the downside, and it pushes some premium into the downward, into the puts down here, and they're sellable around these areas. So that's something that I look at as well. But anyway, Amazon is just really no real specific play here, just a heads up that I like the stock on bounces, and off of this prior high, if we get down to it, I think that's a really good turning point. All right, two more real quick. Netflix is coming into support at $80. Stock has been pretty weak and kind of getting hammered here, and you can see that we broke down below this area in here in Feb, and I think the stock wants to retest that area. This bounce was kind of more of just it looks like about a half back bounce, and looks like we're going to here and probably around 80. So I'm just going to keep that in mind. If I can do something against the 80 level, I'd be really happy with it. And last but not least, I want everybody to keep an eye on Tesla this week as a possible short. There is certainly the chance that the market will follow through on the head and shoulders pattern and move lower. And if they do, it seems to me that this is really just itching to move lower. Notice that the retracement here has been exactly 50% of the up move. And it's, I believe, only bouncing because it is hanging out at the halfback level here at this 50% retracement of this, right? And the fib level, the 61.8, is just below, which is at the 190.06 right here. So I think in a bearish tape, the stock probably breaks down, and in breaking down, it probably makes this move here from about 205 to 190. So that's something that I think you guys should be looking for in the week to come as well. That would be more of a bearish idea, obviously. Well, you want the market kind of wind at your back, so to speak. All right. That's all I have for you this weekend. Thank you so much for hanging out. I've been noticing that the attendance or viewers of the video has been increasing quite a bit as of late. We're almost up to 4,000 people each week, which is great. We're kind of hanging out in that 3,600 to 3,900 range. I'd really like to push that over 4,000 at some point soon. Anyway, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.